So the tax-free matching program is probably the best strategy out there for households that have income that is greater than $200,000 a year. Seeing the article of Jeff Bezos and Elon Musk, all the things these billionaires are doing to create massive amounts of tax-free income, you can do a lot of the same things even if you're not quite at that level. The tax-free matching program brings capital to the pool up to a tune of about a 3-to-1 match on contribution, and then it has a built-in strategy where you can use loans as income, creating tax-free income streams. Loans are one of the secrets to tax-free income. So I'll give you basically an example here. You're out there, let's say you're going to go out and you're going to reposition some capital, and let's say you reposition $1 million. Then a lender is going to come in, the bank, and they're going to add $3 million to that pool. That's a lot of capital, and now they do this without the risk of traditional financing. So no loan documents, no credit checks, no personal guarantees on the funds, which is pretty incredible when you think they're going to add $3 million into an asset you control without personal guarantees. In fact, there's no limit on the match. So if you go out there and you put in $5 million, they'll put in $15 million. So there's no limit on that matching, but now what it does is it creates this $4 million asset that is growing and tax-free and that can be used to secure future income. This is the same strategy that Michigan coach Jim Harbaugh used to create a $1.2 million tax-free income, became the highest paid coach in the NCAA using a strategy like this. And what happens here is the bank deposits that money, you add your $1 million, now you have this $4 million asset. That goes to an insurance company. The insurance company is going to provide the safety and guarantees to the bank and the growth. And I'll kind of go through that. So why do banks use insurance companies? Well, banks have this established flow of funds with insurance companies. So you can go to any bank in the country, you look them up, here's FDIC.gov, you pull up Bank of America, there's the balance sheet, you scroll down, you'll see Bank of America has $22 billion parked in the general reserve accounts of insurance companies. $22 billion. So we put our money in the banks put their money in insurance companies. Why do they do that? Because it's safe and it's tax-free. So then we have this established place, they can put it, they can provide, the insurance company provides the guarantees. Now they're going to use the growth. The insurance company is going to use call options to grow the money. So if you're familiar with call options, they do an exceptional job of giving you upside potential to the market without the downside risk. The key feature there is they have a 0% floor that protects it from losses, so if market drops, it doesn't lose. And then they lock in gains every 12 months, typically. Some options can perform a little bit differently, but in essence, what you're doing is you're creating this high watermark. So each time the market's up, you're locking in those gains, and if the market's down, you have a 0% floor that protects you. And they do this on this extremely efficient chassis where the cost will average less than 1%. And now this is secure because it's under the umbrella of this insurance company. Insurance companies, everything there is tax-free. And it's built to be tax-free. You have loans that come out as income, then you have a death benefit that pays out tax-free to pay off the loans at death. So it creates this really efficient tax-free structure. That's the same one that Jim Harbaugh used to create his tax-free income streams. So now this is obviously, there's pros and cons to every strategy. This is a quick overview, but if you're trying to get the IRS off your back, if you're looking for ways to get more money into a tax-free position, you're worried about taxes going up, this is one of the most efficient use of capital we found. I've been a fiduciary and advisor for 20 years. We use all the different strategies from stocks and real estate and everything else, but this is one of the best ones out there if you're trying to take wealth from $2 million to $5 million, $5 million to $10 million, and really create more tax-free incomes. So check out the video series we have that will go into more detail, give you all the ins and outs of the strategies. My name is Denver Noes from Wealth for Life. Thanks for watching.